approach of the government towards taxation. First, the indirect taxation. The government is committing to goods and services tax, for which a separate constitution amendment has already been introduced in this House with its normal advantages to the country. I will not deal with that at length. Amongst the major proposals, there is a proposal for a clean energy cess on coal to be increased from rupees 100 to rupees 200. There are at least 8 items which constitute what we call the inverted duty structures, where the input duties are larger than the subsequently and which corrections are being made. It's a continuous process that goes on. There are 14 items in which customs duties are being reduced and rationalized. Excise duties in 8 items are being reduced and rationalized in 2 others. This is a part of the proposal to make Indian manufacturing more competitive. As far as direct taxes are concerned, I have laid down a larger roadmap to make corporate taxes in India to be globally competitive over the period of the next 4 years, to bring it down from 30% to 25%, so that along with other competing economies, our taxation structures are in comparison. As far as the wealth tax is concerned, in view of it being a low return tax, with a very large effort goes in, I have abolished that and replaced that with a 2% additional surcharge on the super rich, so that the quantum which we are going to get is many times more, and rather than the other hassles and difficulties which were attached to the wealth tax assessments. There are some proposals with regard to the REITs, the Real Estate Investment Trust, the Infrastructure Investments Trust. The pass-throughs have been allowed. I have deferred the proposals of GAR with regard for 2 years. As far as the middle classes are concerned, there is several exemptions with regard to health insurances. Every section of the society, from normal citizens, senior citizens, very senior citizens, the limits have been enhanced, so that those enhanced limits of 10,000 each in each case can get an additional tax advantage. The National Pension Scheme, to convert India into a pensioned society rather than a pensionless society and incentivize people for that, investment made up to 50,000 rupees would also be tax exempted as provided in the finance bill itself. To encourage the girl child and people investing in favor of the girl child, large amounts, the Sukanya Smriddhi Yojana, that itself would be exempted under Section 80C if you invest in favor of the young girl child. Transport allowance which is available to citizens because of the cost of transportation going up, I have doubled it as far as the exemption is concerned. There are several proposals, some dealt with in the finance bill itself, some will be dealt by the other law which we are going to debate with regard to the black money bill, as we call it, or the undisclosed foreign assets and incomes, which will be separately be taken up. With regard to squeezing the domestic quantums of black money, several steps I have announced as far as the budget, the finance bill is concerned. Since, Madam, you made a mention to my request, and which is a part of the amendment proposals with regard to deleting some provisions, and Professor Saugat Roy wanted to know as to which ones are those. They are with regard to the PDMA. I just wish to read a very small statement as to the reasons, and the reasons are not attributable to Professor Saugat Roy's letter itself, something with which he was crediting himself. Madam, I seek your indulgence and the House to explain the circumstances for omitting certain provisions relating to the Public Debt Management Agency. There are 6 different provisions which we are omitting. As the members of the August House are perhaps aware that the proposal of a separate the management of government debt from RBI was first mooted by the RBI itself in its annual report 2000-2001. Subsequently, several independent committees have recommended the establishment of an independent debt management agency, equidistant both from the government and the RBI. The Percy Mystery report of 2007, the Raghuram Rajan report of 2009 have both strongly argued for separating the debt management function from the RBI. The recommendations are, I must say, well-founded. Continuation of the RBI as a public debt manager, or for that matter a regulator of currency and other derivatives, one, fragments the bond market in India, limiting its liquidity. Two, creates a conflict of interest between the RBI's role of controlling inflation, as now enshrined in the Monetary Policy Framework Agreement, and in its interest in keeping interest rates low to reduce the cost of borrowing from government. Three, perpetuates the conflict of interest within the RBI from being a regulator of government securities and simultaneously being both a trader in government securities as well as owning both the exchange on which the orders from government securities are matched and the depositories for government securities. In the bond markets, these are separated. The regulator, SEBI, neither owns the stock exchange or a depository, nor desists trade in bonds. Four, forces the banks to invest in government securities through the instrument of statutory liquidity ratio. Having an independent debt management office is also the best international practice in countries like USA, UK. Neither public debt is managed by central bank, nor is regulation of the GSEC currency and other derivatives of the central bank. Since the RBI has been handling public debt management, the government, in consultation with the RBI, will prepare a detailed roadmap separating the debt management function and the market infrastructure from the RBI and having a unified financial market. It has therefore been decided to delete the PDMA provisions from the finance bill for this financial year. I want to clarify, Madam Speaker, that this government is committed to unifying the financial markets, both by making the government securities part of this market as well as creating a proper bond currency derivative nexus. Besides this, there are some changes which I will, in the tax proposals, not very significant, but some significant changes also, which towards the end when I reply to the debate, I will refer to them. And with these few words, I commend the finance bill for acceptance of this honorable House.
सम्मानीय सदस्य राज बब्बर जी ने बहुत महत्वपूर्ण मुद्दा उठाया है और अच्छा होता अगर वो पिछले अपने टर्म में भी उठाते तो ये जल्दी एक्शन शुरू होती, क्योंकि मैं आपको प्लीज